Welcome to Insights. I'm Eric. I'd like to do a review on cotton. I'd like to have this to be a partially opened content review for some to be introduced to the concepts of the matrix and the evolution of the trade, and then finish it off for subscribers towards the end. Let's open up the matrix here, and we'll see a restricted view of cotton. Cotton's located on number 1 on the line item. It's been up for 6 months and produced a pretty impressive 29% return over that time. The primary trend is what the evolution of the trade follows, but it really follows all three trends simultaneously, the daily, the weekly, and the monthly. The primary trend is discussed here, or revealed here. This is the price cycle, and this is the time cycles. Anything below zero is an early or underperforming its normal cycle. The rally that we're seeing right here at 29% is above its mean. Time at 6 months is below its mean, so there's a lot of room for cotton to run, and I think people have to be patient with it. This is above its mean, but it's not outsized to the point where you're seeing two standard deviations or more, which is extremely rare. The weekly is a little bit more extended at 33 weeks, where both the price and time cycles are above its mean. But they're not red, and they're not statistically significant yet. Something to keep an eye on. Whether or not these numbers probably don't warrant a deep correction into the weekly time frame. The daily, like most agricultural commodities and even the grains, is where the concern lies. It's been up for 45 days, and the price cycle is nearly 3, which is it tells you where all the runs come up all up front inside the daily impulse, and the time cycle at 45 days is nearly 2, and I've seen these go up to 3-4 standard deviations, but those are exceptionally rare, and 2 is exceptionally rare too. So there's not much play in cotton. Cotton continues to perform due to weather conditions, whether it be the dry summer or dry spring, or less than ideal conditions, the extreme cold. I'm not sure how that plays out into cotton in the up and coming crop. It's hard to know. I'm not an expert on the fundamental side of things. I just follow the invisible hand, which is pretty useful in itself. It gives a different message other than the fundamentals. It often leads the fundamentals. The real concern lies here, and I'm going to talk about it briefly before I cut off the open part of this discussion, is the energy build. And the energy build for cotton is extremely negative. DI of -89 and -77 is one of the lowest energy builds, or strongest bearish energy builds inside the matrix. Now, what that means exactly, well, we have to look more specifically at the chart itself and look at the numbers and the trends. And we're going to talk about how these numbers are going to move, which will likely trigger a daily reset of some sort, and that's the play that we're looking for. Right now the primary trend is up, everything's extended, there's no play. Anyone who has a core position in cotton, and they bought cotton's core position on 9 in September of 2000, well, that still holds. If you're looking to escalate it, we're looking for a reset, and we're looking for a reset that's going to reset the daily and or the weekly time frame. So that is something that has yet to come. It's going to be identified here in the phase column with the letter R, and the name column will be highlighted yellow. But for that to happen, it's really going to be dependent on energy, and we're going to have to take a look at that further. So I'd like to close the open section of this review down. Thanks for watching. If you have any questions, contact me at the blog. The links are below in the video, and I encourage you to learn more about the matrix and the evolution of the trade and consider a subscription.